In this video, traders, we're going to look at the 3-minute stochastic cycle trade. Stay tuned. Hey traders and investors, a very warm welcome to you. This one is for traders because this is an intraday trade that has stood the test of time. It's something that I've used for, I would not quite a decade, but not far off. It's something that when it happens and it's in play, it's a very nice trade. Let me tell you the rules about it. I have discussed it before, but I've made a few little tweaks to it as we've kind of adapted in conditions. All right, so I have in front of us a SPDR's 3-minute chart. Now, SPY is the S&P 500 ETF. The only reason I have used this is because I want to easily show you the open and the close. So the Dow, the S&P works on both. I use the Dow personally because I prefer to spread bet, and the spread betting on the Dow generally is cheaper than the S&P 500. But 2:30 is the open, 9 o'clock is the close. So the easy way for me to show that for you on here is to use the SPDRs, which is the ETF. If we were trading the Dow, it would be the same thing. The only trouble is that our stochastic and our indicator will be ruined because we'll be seeing a 24-hour chart and I don't want to adjust the time scale. So it's the same thing. This will be exactly the same thing as if you're trading the Dow. You just want to make sure that you have a regular trading hours session only. So if you're trading FTSE, you want 9 till 4:30, DAX 8 till 4:30, 8 till 4:30 both on the FTSE, DAX, CAC, or the European indices. If you're trading the US indices, if you're in the UK, 2:30 till 9. If you're in another part of the world, work it out for yourself what your time zone is. But the important thing is you need to see that gap. You need to see just the day's trading. Do not use it on a 24-hour chart. It's not as effective. Okay, so I have this SPDRs up, which could easily be the Dow, like I say, the S&P 500. It happens to be the ETF of the S&P 500, but the shapes are relatively similar most of the time. 3-minute chart, and I have here on the lower section of my chart stochastics, and I've got the K at 14, D3 smooth 3, and we've colored it as you can see. My overbought conditions are, what I've got them set at 80 and 20. It doesn't really matter, you can adjust that. I just prefer a little bit light. Some people just like to use 25 and 75. I think 80-20 is better. So the rules for this are, it works way better in a downtrend. So for me, I only use it on downtrend days. So that's my first kind of rule, is the day has got to be in a downtrend. And I'm going to kind of grubbily write this with my drawing pen. But if you're watching this, you can kind of take notes if this is the sort of thing you like to trade. For day traders only, first of all, I need to identify a trend. And a trend to me, listen guys, you can use an ADX, you can use MACD, I just use eyeball. I'd say, hey, listen, it's opened here and we've gone quite a heavy bit down. The other way you can use is say, hey, listen, you know what? We've been oversold for the majority of the morning. That's another way of doing it. We've been in an oversold condition from kind of 2:30 start for the first 3 hours or so. We've been oversold, or first 2 hours. That, to me, is telling you that, hey, you know what? There's a supply-demand imbalance. We're in a downtrend situation. We've been driving down. We haven't really pulled back much. And we keep pushing to lows, pushing to lows, pushing to lows. It looks like it's going to be a trend day from high to low, or it's a trend day so far. It might reverse later on, but it's a trend day so far. Okay, so you've got that. Now you look at your stochastics with the settings I just said, and you wait for the first overbought condition on a 3-minute chart. 3-minute chart, it works best on 3-minute chart. I've tested it on multiple time frames, and from the way I've approached it and the way I've looked at it, 3 minutes is the best. If you've got another way of looking at it, we'll welcome your thoughts in the comment section below. Okay, so we're waiting for the first overbought condition on the 3-minute chart, and we're looking to go short on the direction of the trend as we come off that overbought condition. So as it starts to come from 80 and rolls below 80, we're going short right here. And I'm just going to draw that in with my mouse, but you can see exactly where we're going short of that position there. It's probably around that candle there actually, and we're looking to come out of it as we go oversold and come back into overbought. So in actual fact, one first exit for you is going to be as we push through lows when we come back here, probably a little bit higher than that. Now, can you scale it, or can you trail it? Of course you can. You know, this first pullback here, number one, could be the start of an absolute monster move, and often it is. But you want to take some off the table as you go back into oversold condition. I think that's the best way of playing it. That's how I prefer to play it. Get short in the first overbought condition, take some off the table in the first oversold condition, following the direction of the trend. Great. As now it kind of carries on stretching, you want to scale stuff off into it, or you hold some into the close. Now this example, if you had some into the close, it looks like you're going to be out of break even, or you're going to be a slight profit on that one, but you've more than made up for it with the stuff you've taken off as you've kind of rotated into oversold, into oversold, into oversold. Maybe you've got a trailing stop on it. The point is, it gets you on the end of some absolute beautiful trending moves. And it seems to work way better in a downtrend. Let me find you another one if I can, guys. I'm literally going to do this on the fly and see if we can find another one for you. We haven't had many downtrends, but when they come along, they do work very well for this setup. And I don't know why it works better for downtrends than it does for uptrends. It just, in my experience, doesn't work as well for uptrends. Here's one again. We've got a gap lower, so that's the kind of thing when you get a gap lower, maybe you want to pay attention to it and say, well, actually, gap lower might mean this comes into play. So the first 2 hours we've got here, obviously the time zone was different. This is when the clocks went back, forward in the US, but not in the UK. But that's the opening anyway. First 2 hours, we're in a downtrend. We've been oversold for a lot of the time, so we're ticking the boxes now. Now we're waiting for that first overbought condition on our 3-minute chart. Do not take it on the second, do not take it on the third, fourth, or fifth. It's got to be the first one. We're coming to overbought territory here. Okay, as we start to roll back into neutral territory, which by my reckoning is probably around about here on this candle right here, we are going short. So we're selling short there. Now, didn't really talk about stops. Stops are going to be above that swing high. Very simple way to put your stops above the swing high. You're waiting till it curls anyway to go in, and put your stop above that swing high. 6, 7 ticks, 10 ticks, whatever it may be, whatever you fancy doing above the swing high. And again, we're scaling out as we go into the oversold condition, come back into overbought. So very nicely here. Often you're going to get this, guys, when you go through the low, you're going to get a little fake through and a push back up. So you can modify it a bit. I think that's fine to say I'll scale out as we push through the low, or you can wait for that curl back up into overbought condition. Again, we're not talking a massive move here, but it's a nice high probability trade. In this example, it's not a huge move. In some of the ones I've seen, especially when we get into really heavy conditions, you get a first pullback, and that is just the start of a monster move. And I tell you, when things are really getting hammered to the downside, hold it to the close. Just hold that sucker right to the close, because everybody's running for the door. You're in a sweet spot. You've sold that first pullback. You're in a lovely position. You've got a lovely cushion. The time is now to set back, push the chair back, have patience, and let that thing run. So downtrend only, 3-minute chart, stochastics on the settings I said before. First overbought condition, you're going short, your stop is above the high, and your target is the new low or a trailer into the close. Let me know your thoughts in the comment section below. Keep your risk managed. Whatever you do, take care. Good trading. Bye-bye.